Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Hershey stock is a buy. Hershey, stock ticker symbol HSY, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Hershey. Hershey was founded back in 1894 by Milton S. Hershey to develop caramel and chocolate candies. The company has since grown to sell iconic classics such as Reese's and Kit Kat alongside its namesake brands. Today Hershey is a global player with over 17,000 employees and remains headquartered in Hershey, Pennsylvania. Now let's look at the price action. Starting with the 1-year chart, we see that Hershey had a CAGR of about -15%. Zooming out to the 5-year chart, we see that Hershey had a CAGR of 12%. Hershey share price has pulled back recently against a backdrop of strong, consistent gains over the past 5 years. This may be a buying opportunity. If we perform a backtest comparison of investing $10,000 in Hershey versus the S&P 500, we find some decent results for Hershey. In that comparison with the S&P 500, $10,000 invested in Hershey would have grown to $19,251 or a 14% CAGR versus $20,650 or a 16% CAGR if invested in the S&P 500. This demonstrates slight underperformance for Hershey. However, a Hershey investment would have been less volatile with a 18% standard deviation versus 19% for the S&P 500. Hershey outperformed the S&P 500 in terms of the best year performance, for which Hershey grew 40% versus S&P 500 31%, and worst year performance where Hershey fell 18% versus the S&P 500 18% fall. In terms of max drawdown, Hershey fell 31%, more than the max drawdown of 24% for the S&P 500. Hershey also underperforms the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio despite having slightly less volatility. Now let's hop over to market share and take a look at Hershey's market share. So we come over here and type in the ticker symbol for Hershey and see that the market share is 1.24% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that a fair amount of all money spent for food or beverages goes to Hershey. While this is a relatively small market share, it has been growing. The 5-year market share CAGR for Hershey is 1%. This means that Hershey's market share is growing just above the industry's growth rate. If we start in 2019, we see that the market share was 1.18%, 1.19% in 2020, fell to 1.15% in 2021, rose to 1.22% in 2022, and 1.24% over the trailing 12 months. Market share growth at Hershey is slow but steady. In this newest version of market share, we can actually perform a sub-analysis among a basket of similar companies. For instance, if we want to compare Hershey against a peer like Mondelez, we find some interesting results. Out of a basket of those two companies, Hershey has a 24% market share. We see that Hershey's share of those two companies grew at a 0% CAGR. This means that a basket of Hershey and Mondelez are growing at about the same rate. Hershey has been growing market share on an absolute basis and is growing in line with similar companies in the confectionery space. Let's take a look at the fundamentals. Gross margin is 45%. This is a nice, hefty gross margin for a food company. Revenue has compounded at around 9% over the past 5 years and has reached over $11.2 billion most recently. Seems like everyone loves Hershey Kisses. Looking at cash flow, we see a 8% CAGR over the last 5 years for operating cash flow, while capex has increased at a 24% CAGR. As a result, free cash flow has grown at a 3% CAGR. Capex is increasingly quickly, but operating cash flow is huge and continues to grow. I would expect free cash flow growth without issues for the short to mid-term. Weighted average shares outstanding have fallen over the last 5 years. going from 211 million shares in 2019 to 206 million shares most recently. Hershey has been buying back shares. This is another reason to love Hershey. Their commitments to share buybacks is pretty amazing. In fact, almost 1% of shares are bought back and retired every year. Sweet. Now let's view return on invested capital. Return on invested capital has risen from 20.9% in 2019 to 23% in 2023. I like where this is going. Hershey has become more efficient in driving profits from its investments, with this trend bottoming in 2022. Hopefully this continues to grow. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 50 days in 2019 to 51 days most recently, the cash conversion cycle for Hershey has not changed much. While the company achieved a cash conversion cycle of 41 in 2022, this metric has trended upwards since then. This is not good news. I would like to see this value approach zero, so Hershey definitely has more work to do to improve. Now, let's look at Hershey's debt. The net debt to EBITDA has fallen over the past 5 years, going from 2 in 2019 to 1.6 most recently. I am very happy to see great debt management by the company. Clearly, they have been using their massive free cash flow to repurchase shares and pay down debt. Last, let's explore dividends. Current dividend yield is 2.5% with a dividend payout percentage of 46%. Hershey is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at an 11% dividend per share CAGR over the past 3 years and a 10% dividend per share CAGR over the past 5 years. Looking at the dividends per share chart, we see a steady increase in dividends per share every year. The fundamentals of Hershey are pretty good. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. The channel has grown so much recently, so thank you for your continued support. It really means a lot. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Hershey. It is a food company with a gross margin of 45%. The 5-year revenue per share CAGR is 10% and the 5-year free cash flow per share CAGR is 4%. This is nice. Steady revenue and free cash flow growth coupled with a great gross margin. A return on invested capital of 23% is good and growing. Next, the cash conversion cycle of 51 days is high. I would like to see much better inventory control here. Concerning debt, a net debt to EBITDA of 1.6 means that it would take Hershey a little over 1.5 years of earnings to pay back their debt. So from a fundamental standpoint, Hershey is a strong company. Now let's switch our attention over to valuation. Hershey is undervalued relative to the S&P 500 with a ratio of 0.8. The price to earnings growth, or PEG ratio, is 2.8, indicating that Hershey is overvalued relative to their projected earnings growth. Hershey has had steady, consistent growth over the past 5 years as noted by its market share expansion. Management has operated the company very well and produces growing free cash flow, which they have then used to buy back shares, pay down debt, pay dividends, and reinvest back into the business. Given the recent pullback, I hope Hershey buys back a lot more shares. One thing to note is the possible effect of Feastables, a confectionery brand built by popular YouTuber Mr. Beast, on Hershey. Much has been made in the media about how Feastables will disrupt Hershey. However, I think these concerns are overblown as consumer habits in the candy business are notoriously difficult to change. Warren Buffett famously noted that the ranking of the best-selling chocolate bars in the United States has largely remained unchanged for many years. In my opinion, Hershey is a well-run, slow-growing company that seems to be near a fair price. For me, Hershey for sure is going on the watch list. Many thanks for watching. What do you think about Hershey? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.